Plain Legal. I'm DNA High Easton, and today we're making the law something everyone can understand. You're watching Now Media Television. Welcome to In Plain Legal. I'm your host, DNA High Easton, and today we're tackling something that every business owner faces: tax season. For many, it's a time filled with stress, confusion, and the fear of overpaying. But what if tax season didn't have to be overwhelming? Joining me is Olga Hurtado, founder of NeatBooks. Olga took her business from a solo $12,000 venture to $1 million success, all while helping entrepreneurs simplify their finances and take control of their money. With her MBA in business analytics and expertise in systems like Profit First, Olga's mission is to take the chaos out of accounting and empower business owners to thrive. Olga, thank you for joining and welcome to the show.
Thank you, DNA, for inviting me.
You're welcome. Well, let's dive right in. Entrepreneurs feel overwhelmed and unprepared during tax season, often losing money due to lack of planning. What do you think are the most common mistakes you see small business owners make that cause them to pay more in taxes than they really need to?
Well, DNA, what I think and what I've seen and I witnessed with mostly all of my clients is that they wait until tax season to look at their numbers. So there's nothing to plan there. You just have to react right there. So another common mistake that I see with these clients is that they mix personal expenses with business expenses, which makes them lose deductions. So you cannot track mileage or meals or home office properly. Those small things, they add up fast. So you do not wait until tax season to look at your numbers. Just do it in a regular basis.
So would you say that, obviously, depending on the type of legal structure we're talking about, people might have to do taxes at different times. But, for most entrepreneurs, they are kind of on the LLC basis, or they're solo practitioners, right? So they are in control and do a sole proprietorship, right? So they typically
Right.
look at the quarters. Would you say that based on the common mistakes, it's good for people to start looking at their taxes quarterly instead of waiting until the whole year to file?
Well, that will be ideal. The sooner the better. If you wait until the end, there's nothing you can do. You're just going to have to react to the results you have at the end of the year. But if you do it, year round on a quarterly basis, that will be better for your business and for you and for your pocket. Okay, just by setting aside a few minutes, like, each quarter, it doesn't have to be like a thorough audit of your books or anything like that. You just gotta have to, like, sit down and review that your books are accurate and see the bottom line and see how that is gonna affect your taxable income. That's when you're gonna see, like, oh, okay, what should I do now? Like, you can hire a professional to do that as well, to help you and to guide you throughout, that process. But at the end of the day, it's, the only responsible person for your taxes is yourself. Like, nobody else is gonna do it.
That makes sense. So along those lines, how can building simple year-round financial habits make tax season less painful and actually empowering?
Well, as I just said, like, setting aside a few minutes, okay, every quarter. If that's the time you have, then do it quarterly. That's okay. Because it's gonna empower you. The more information you have throughout the year, it's gonna empower you to have, like, to make better decisions, even for your tax liability. So you can see trends when you start reviewing your books on a quarterly or monthly basis. You start seeing trends on your transactionality. Okay, so you can catch errors early. You can actually feel that you have more control of your books. And if you see, for example, that your accountant or bookkeeper coded something incorrectly, that you're gonna catch it, and probably it's not an expense, it's a distribution. Let's say, for example, it's a big amount. Then you're gonna have a huge impact that you didn't catch earlier, that you didn't account for your tax liability. So imagine that. So to me, it's just, take a couple of minutes, throughout the quarter, throughout the months, just to review them, the details, things that catch your attention, that will be enough for you to start creating a habit for that.
That's really, really, really good advice. And I think most people, including myself, need to make sure that we pay attention to it. So what do you think are some of the most, overlooked deductions or tax breaks that entrepreneurs often miss but could make a big difference in their bottom line?
Well, listen, the normal ones, probably professional education. Most of these business owners don't understand the importance of keep, training themselves and learning more. So those professional education, you can, if they are business related, you can deduct those. Also, if you use your home as as your office, then you can have a percentage of that deducted from your tax liability. However, there are some deductions when you're a business owner, and that comes with a tax plan that you can use as well. For instance, if you are a solo business owner, and you want to have a 401k, you can do that, and you can leverage that towards your taxable income, and that will be money to you, for you, to your old self. Okay, so you're not paying that money to the IRS. That's also an overlooked deduction. And also, if you're going to offer benefits to your employees, if you have employees and you know that you can actually help them with those fringe benefits, those are going to be deductions. And by the way, if you have a 401k for your employees as well, you have a business credit. So that will be amazing. A business tax credit, that will be amazing for you to review with your your tax accountant, so you can have, a better idea of what are the other options besides only expense deductions.
That's amazing. And I have to say, I'm going to go a little off topic with you for like a 1 minute. But one question I do have, because after COVID happened, we're kind of in the day and age of everything being virtual. So,
Yeah.
you had mentioned at one point that an office or working from home is a business expense. What happens if you're kind of in that virtual hybrid situation where your house can operate as part of your business, but you're also going into an office physically? Does that qualify for a deduction or a tax break?
No, in theory, no. Okay, because you already have a business that you can go to. Okay, these are for people that have 100%, a separate, like, space in your house for your office, and you have a room, there's no bed there, like nobody sleeps in that room. So if you are in that position that you work 100% remote, you have an office space, you have, like your desk, everything in that space, and that will be, like 100% the place that you work in, then yes, you can deduct that portion of your house as a business deduction in your in your taxes, in your
Well,
income taxes.
thank you for sharing that for us. And why is proactive tax planning, looking ahead, much more powerful than just reacting when it's time to file?
Well, it's strategy. Like, you gotta strategize that part of your business. Because the taxes from a surprise, that becomes a problem, because sometimes business owners, they don't save money for their taxes. So that's when, the stress comes along. So if you have that tax plan throughout the year, and you have the cash flow and everything organized in your finances, you might decide whether or not to buy an equipment, which, by the way, you can depreciate 100% doing, in your taxes. Also, if you have employees and you have, like a bunch of income that you need to, start like deducting, then you can pay bonuses to your employees. And that will be beneficial to them and beneficial to you, because that will motivate them. So the way that you actually start reducing your taxes with a proactive tax planning is more like playing chess instead of checkers. So you start like thinking about, okay, I have this money, and I don't go around and running to buy the most expensive car, because that's what most people do.
Mm-hmm.
Okay. What you gotta do is, okay, I'm gonna buy an asset that it can convert some revenue into my business, because that's what assets for. Okay. And also, I can motivate my clients with bonuses. Also, I can maximize my 401k, which is gonna be beneficial to me. So that's basically the proactive tax planning approach that you want to listen from a tax advisor.
That sounds amazing, and it sounds like that working with a tax professional really can shift the outcome compared to going at it alone and relying on basic tax software. Would you agree?
Yeah, definitely. And not only that, if you only rely on social media, for instance, TikTok, and you are, listening to TikTok and scrolling on social media just to get tax advice, you're gonna get screwed. Because there are too many tax advices there that are incorrect. So find someone reliable that can help you build this strategy, but that you can leverage that money and put it into your cash flow, okay, and grow your business from those tax savings.
That is amazing, amazing insight and advice, and I really appreciate you sharing that with our viewers. Coming up next, Olga reveals the hidden financial pitfalls of franchises and how to avoid getting trapped. Stay with us. We'll be right back with clear explanations, practical advice, and the legal insights you need without the jargon. This is In Plain Legal on Now Media Television.